quantitative easing is not working. Quantitative easing, we're being missold something. Simply publishing or expanding these inert central bank reserves and trying to scare us all to death that they're actually printing real money is a fraud. Since the Federal Reserve began, it has expanded its balance sheet by almost 1 times US GDP, which is to say of the order of almost 21 trillion US dollars. A huge, if you will, imaginary supply of dollars. But I say imaginary because the value of $1 versus the rest of the world has actually appreciated over that time. So I find there is a great riddle in the world of finance today that you can create new supply of $21 trillion and the price of those dollars goes up. Something doesn't make sense.
Hugh, the markets, as we know, have, well, some aspect of the markets has rallied from the March 23rd low. The consensus view, shall we say, is that that money that the Fed and other central banks have been creating has just found its way yet again directly into asset prices. Do you agree with that conclusion? And if that is correct, what needs to be done then to divert the funding into the real economy?
Yeah, so where the Fed has been, the Fed has been very, very radically, if you will, in holding the line. The underlying problem is really that there is a shortage of dollars. America has decided over several decades to impose a global dollar standard, a monetary standard on the rest of the world. And there's one thing to have a standard. There's one thing to be the king, if you will, and there's another, you have to behave regally. You have to behave like the king. And so if you're going to impose a dollar standard on the world, you have to stand by and provide sufficient liquidity. And that's actually where they've been failing. And so when we had this tumult in the market in March and everything was falling dramatically, it's because people are having to sell other assets to create dollars to repay debt. And so the Fed and its swap lines are very successful at those moments in kind of holding it back, if you will, in putting their thumb in the dam. And so what I would, in terms of like just stopping this periodic, these flares, dramatic flares which we fear we're all going to be kind of caught up in flames, would it not be better to target not bond prices, but instead to target the actual value of the dollar? I think when I look at the world of macro, I think it's telling us that we need a lower print on the dollar itself. I think we need the Treasury and not the Fed to step up to the plate and tell the world we're going to target 70 or 60 on the DXY. That would change the world.